we not only ended the month of June, but we ended the second quarter and we finished the first half of 2023. And this year has not gone the way a lot of pundits expected at the end of 2022. After all, inflation was raging, the Fed was hiking rates, and the Fed was now on a trajectory of hiking much faster, where the ultimate peak would be much higher. So all of this was negative news. The stock market got clobbered in 2022 as a lot of this bad news came to the surface. Of course, I knew that this bad news was coming. I'd been warning about it. I knew that inflation wasn't transitory, that the Fed was sugarcoating it, and that rates would have to go a lot higher and stay higher for a lot longer. And more importantly, it wouldn't even work. Even though the Fed was going to fight harder to beat inflation, it was still going to lose. Inflation was going to win, although the markets still haven't come to terms with that reality. But based on that negative backdrop, we got this big rally, which again surprised a lot of people, myself included. I was not looking for this spectacular rise in the NASDAQ at the end of 2022. Now, I wasn't short the NASDAQ, so it's not costing me any money. The fact that I'm not necessarily long these stocks, although obviously had I bought them, I could sell them and make a profit. And the stuff that I do own has gone up, most of it. Most of my non-gold stocks, are up on the year, although my gold stocks are up on the year as well, although they had a pretty weak quarter, but they're still up so far in 2023, but not nearly as much as most of my non-gold stocks, which are doing a lot better than the gold stocks. But looking at what happened in the month of June, the S&P rose 8.3% just on a month. A very, very strong month. The NASDAQ up 12.8%. The Dow, bringing up the rear, up 3.4%. Russell 2000 also up 8%. But if you look at the NASDAQ 100, it was up 14.5%. And some of the, speculative ARK innovation up just under 10%. The Grayscale Bitcoin Trust had a huge month, up 38%. And gold stocks were actually down 2.6%. On the quarter, it was a similar story with the S&P up 8.3%, the Dow up about 3.4%, so pretty much unchanged on the month. The NASDAQ up 12. No, I think I've got some of these numbers wrong because I got the same numbers for the NASDAQ. So I'm not sure. The NASDAQ 100, though, up 15% on the second quarter. Grayscale up 17.3%. Gold stocks, the GDX, down 7% in the second quarter. I kind of rushed some of these numbers before the podcast, so I think I kind of mixed some of them up. But here's the real important ones, which I know I got these right. In the first half of the year, the S&P 500 is up 15.9%. So this is the best start to a year since 2019.
Small ebook, big impact, the wealth tree. The only 4 ways that will make you financially free forever. Download it here for free.
And if you remember, or the best first half, it's not really the start of the year, the whole half is over. But what happened in 2019? Well, that's the year the Fed started cutting rates. It surprised everybody by cutting rates. And if you remember, I predicted those rate cuts because towards the end of 2018, when everybody expected the Fed to keep hiking in 2019, I predicted that the next move would be a cut. And I was right. And that surprised the markets. And that's what inspired that big rally. Well, now we've had, as a bigger rally, even though the Fed hasn't even started cutting rates yet, it's still hiking rates and indicating it's going to hike some more. We still got this big rally. And I think it's because the markets don't really believe the Fed. They know the Fed is likely near the end or done hiking. And so that is the relief rally. But again, what the markets still don't get is that inflation is going to get worse, not better. The Fed hasn't won. The Fed has lost. The markets just haven't figured that out yet. So the Dow up 3.8% on this half of the year. So again, not doing that well. Although the Dow was up 3 consecutive quarters. I think it's the only index that is up 3 quarters in a row. The other indexes were down on the fourth quarter, and they're just up the first 2 quarters of 2023. Russell 2000 up 12.3% on the half, and the NASDAQ up 31.7%. That is a huge move. That is the best first half of a year for the NASDAQ since 1983. So 40 years best. But what's more significant is the NASDAQ 100, which is just the biggest NASDAQ stocks. That would include the Googles and the Facebooks or Meta, whatever it is, but those really top companies. That was up 39% for the first half of the year. That's the best showing ever for the NASDAQ 100. The Grayscale Bitcoin Trust up 130%, more than double on the year. But even though it's up 130% on the year, it's still down 67% from its peak. So that really puts the rally in perspective. Shows you how much that trust went down, even with that big gain. The same type of story for the Cathie Wood's ARK Innovation ETF. That's up 42% first half of this year, but it's still down 72.4% from its peak. Now, I think these are all bear market rallies. I think that, yes, there were a lot of shorts in the market that got caught, that have been covering. I think this AI narrative kind of came out of left field. Nobody was really talking about this at the end of 2022. It kind of gathered a lot of momentum in the second half of this year. And so that kind of lit a fire underneath a lot of these big cap tech names that were already going up because of short covering and the fact that the markets were starting to price in the rate cuts, even though, we're not even near them yet, or we haven't had the Fed concede them. The markets have gotten ahead of the Fed, but we've had a lot of acceleration. But all the economic news really has been bad. We've had a little bit of good news. The employment numbers continue to surprise on the upside. But again, I think this is all very superficial. We continue to get a lot of weak economic data on the week. I pulled up a couple of the lowlights. Dallas Fed manufacturing survey. This is for June. Another negative number, not quite as negative as the previous month at minus 29.1, but still minus 23.2. That's a big negative number. And the production index got worse. It went from minus 1.3 in May to minus 4.2 in June. Excuse me, I still got this cough. Personal income and spending numbers. And again, remember, these are not adjusted for inflation. Personal income up 0.4, spending up just 0.1. And in fact, they revised down the spending from April. This is a May number, from up 0.8 to up 0.6. And so these were disappointing numbers on spending. And again, these numbers are not adjusted for inflation.